Thank you, Mr. Chairman, and thank you to our witnesses for being here with us today. People in my district are already living paycheck to paycheck, and they're worried about making ends meet. They're already dealing with the rising costs of everyday goods and services, and the last thing they need to worry about right now is their bank or their employer's bank failing. That's why I'm working to provide transparency and accountability to this process. Where were the regulators? I want to know what the bank executives were doing in the months, weeks, and days leading up to this failure. My constituents deserve to know that we're going to hold bank executives accountable and ensure that this doesn't happen again. These bank failures rattled our financial system. Working families in my district need a stable economy they can rely on. They can't afford more uncertainty when it comes to their next paycheck. And right now, the looming debate over the debt ceiling crisis has the ability to rattle our economy even further. So, Vice Chair Barr, in just a few months, the United States Congress needs to raise the debt ceiling. If the U.S. defaulted on the debt, would it be really bad for our economy? Would it be really, really bad for our economy? Or would it be really, really, really bad for our economy?
The basic answer to that question is that Congress needs to increase the debt ceiling, that there's not other options around that. In the absence of an increase in the debt ceiling, it could cause enormous dislocation to our economy.
So, one really, two reallys, three reallys?
I wouldn't characterize it. I think that it's the right thing to do. I think Congress needs to do that, and really leave anything else about the debt ceiling up to discussions between the administration and Congress. Just to say, from an economic perspective, it would be quite unfortunate.
Thank you. Vice Chair Barr, the second largest banking failure in the United States history, $42 billion pulled in a day. Who was asleep at the wheel?
I think in the first instance, as I've said, bank management is responsible for running the bank. They failed in basic measures of interest rate risk and liquidity risk. They had very many outstanding matters requiring attention, matter requires immediate attention. They were deficient in governance and controls. They were rated a 3 overall with respect to the firm, which means they were not well managed. And at the end of the day, it's the job of the bank and their board of directors to run themselves the way they should. We, of course, are looking internally at our own supervision and our regulation in looking at ways that we could have forced the firm to do more faster or raise standards so that if the firm got into trouble, they had more capital and liquidity.
I certainly hope there's some accountability. Chair Grunberg, moving to you now. First Citizens Bank, which is located in my congressional district, North Carolina's 13th district, was the successful bidder for Silicon Valley Bank. They have a proven track record in this space and are already instilling greater confidence in our banking system. Can you tell us about the evaluation process for the bids that were submitted and what made First Citizens the most attractive bidder?
Two reasons, I'd say, Congressman. One, financially, it was the strongest bid for the FDIC. And two, it was a bid for all the deposits of the institution and all of the loans of the institution, so that it provided operational certainty as well. So from both a financial standpoint and an operational standpoint, it was really the strongest bid we received.
And it took a while. You know, why wasn't Silicon Valley Bank purchased sooner? I think that certainly would have created more stability in this situation.
If we could have sold it that first weekend, that would have been desirable. The fact is, Silicon Valley was a pretty large institution, $200 billion in assets, and pretty complicated in terms of its business activities. So for a potential acquiring institution to do the due diligence over a weekend and reach a conclusion and make what was frankly not practical. And so we set up a bridge institution and for both of the failed banks, and we're able in a pretty orderly way to set up bidding processes for each. In fact, for Silicon Valley, we had considerable interest and got a couple of requests for additional time for interested parties to do due diligence. So we extended the bid date a couple of times to give people time, and we ended up, getting, I think, 27 bids from 18 different sources. So it ended up being a pretty constructive process.
Thank you very much. I yield back.